Another Fed meeting leads to another rate hike, leaving the American people thinking, when will this end? Unusual Whales tweeted out earlier today that the Fed increases rate hike by 50 basis points. This 0.5% increase brings interest rates to the highest rate it's been since 2007, just before the 2008 housing crash.
I'd like to underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. Today, the FOMC raised our policy interest rate by 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year.
Just a reminder for everyone watching, this is the same Jerome Powell that pushed the narrative of inflation being transitory when everyone who had a brain knew that it absolutely is not.
Projection in the SEP for total PCE inflation is 5.6% this year and falls 3.1% next year, 2.5% in 2024, and 2.1% in 2025.
I've said it before and I will say it again. The privately run and held entity named the Federal Reserve should not exist. They have so much more impact on our day in and day out lives than any elected official that we have any say in electing, but we have no control over who the president appoints to be the chair or any of the board positions. I don't believe that's how a democratic republic is supposed to work. Last time I checked, the government derives its power from its citizens. Back to today's news. As you can see, the Fed has no plan in ending the Fed rate hikes anytime soon. They plan to go well into next year and more than likely into 2024. Otherwise, they're going to have to adjust that 2% goal, which, don't get me wrong, that hasn't stopped them before. Just like from the Fed meeting today, they already expect worse numbers than their September projections in GDP, unemployment, and inflation. Jeremy Siegel, a Wharton finance professor, has been an often critic of the Federal Reserve. Siegel blames the Fed for their handling of inflation, but also for expanding liquidity by printing trillions and trillions of dollars more than any other time in history, causing the inflation in the first place. Just like quote unquote experts in other fields, they're just going to follow the data no matter how many rate increases they have to do. Let me know in the comments below what you think about inflation and the U.S. economic outlook over the next couple of years. Thank you for watching. Don't forget to subscribe. We'll see you next time.